welcome. Very excited for this discussion with our esteemed panelists here. They represent a pretty wide range of actors. We have a representative from the CDFI world, a bank, the philanthropic arm of a major payments company. And they've all played an important leadership role on this topic of reviving and now serving Main Street in times of crisis and beyond. So I'm going to introduce them momentarily. We'll have a discussion for about 47 minutes and 23 seconds. But before we start, a couple minutes on who I am and the topic today. So I'm the founder of a new venture capital firm called Resilience VC. It's entirely focused on investing in and supporting the next generation of fintech startups that are building resilience for low-income consumers and underserved small businesses. And I think what we've all seen over the last 2.5 years and what we are trying to tackle at Resilience VC is this fundamental challenge that the COVID crisis did not start and did not end, but painted in stark relief, which is that small businesses in this country are extremely vulnerable. They're extremely vulnerable. And Main Street, by which I mean small businesses and the people that work for them and the people that own them, really is the anchor of the U.S. economy. While the numbers vary depending on how you define small business, they make up about 99% of businesses in this country. They employ about half of the U.S. workforce. But as a result of the pandemic, nearly a third of these small businesses shuttered, many permanently. And even those that didn't shut down struggled mightily, as we all know. They needed to lay off employees, they needed to cut employee hours to reduce expenses, and that created a ripple effect throughout the livelihoods of many. A survey by CFI, the Center for Financial Inclusion, showed that those ripple effects meant that people were reducing their number of meals, they were skipping loan payments, they were turning to high-cost credit to survive. So COVID really was a massive, massive shock for Main Street, certainly the biggest that I've seen in my life. And part of what we're going to discuss today is how the organizations that our panelists work with supported Main Street in their moments of in their moment of crisis, and how those responses may have differed or changed across different parts of the country and different types of small businesses. But COVID also reinforced, I think, what many in this room already understood, which is that these small businesses exist in a state of vulnerability to a whole slate of shocks and stressors as big as COVID, but also as small as a supply chain disruption or a health emergency of an owner. And any of those things can also push a small business into bankruptcy, can push an owner into poverty. And this vulnerability is a tax. It's a tax on people's financial health, their physical health, their mental health, and that's a big problem. So we're also going to discuss the big gaps that remain, and we're going to continue, and how we can all continue to respond and set the infrastructure that is going to make Main Street more resilient. And all of the organizations here are addressing that risk head on, individually working alongside the government, in some cases, sometimes working together, as we'll hear. So let's get into that conversation and hear from our panelists. I'm going to start by introducing to my left here, Luz Urrutia, Chief Executive Officer of the Axion Opportunity Fund. To her left, Jonathan Jacob, who's the head of Minority Depository Institutions and Strategic Client Partnerships at Wells Fargo. And to his left, Shamina Singh, who is the Executive Vice President of Sustainability at MasterCard and the President of the MasterCard Center for Inclusive Growth. So thank you all for being here. So I want to start by framing this fundamental problem for us, which is how have the needs of Main Street evolved from pre, during, to this sort of current extended post-pandemic crisis that we live in? And what do we know about small businesses that maybe we didn't know before? And I'm going to ask Shamina to start us off with that.
Thanks for moderating, Vikas, and I'm really glad. This is my first FHN, so welcome back to being in person. I think that what you said at the beginning is spot on, which is the pandemic uncovered a lot of the vulnerabilities that we had been sort of pushing downstream for a long time. I think that what it reinforced are the things that we already knew, which is, I think primarily that those who do not digitize run a very high risk of not succeeding. And we have seen that over and over and over again. In fact, during the COVID crisis, we did a study of businesses in Chinatowns around in New York and San Francisco. And we could see the data showing that although about 20% of businesses in New York City had actually digitized in some way, there were only about 3 or 4% in Chinatown who had digitized. And indeed, those restaurants and those businesses mostly dealt in cash. So when the crisis hit and also when there were sort of political ramifications of calling out COVID sourcing and things like that, the Chinatowns and Chinese-owned businesses just went crashing at a rate that was sooner, harder, and more longer lasting than other businesses. So I think despite our best efforts to wrap our arms around all of these small businesses, I think digitization is probably the thing that we saw most. Other things, obviously, around access to capital, and this is where Luce and Jonathan will come in, but you know, the ability for businesses, small businesses, to even understand where they can get capital, much less pull it down, became even more apparent during the crisis. And although even the PPP loans that were generated by the federal government, it was really hard to pull those down. So again, access to capital, but also related to digitization of services that allow you to even access the capital. I would sort of call those two things. And then I guess the last would be, which is kind of what the center's theory of the case is, because we sit in MasterCard, we believe that access to networks that powered the modern economy determine your success. And MasterCard obviously sits as a payment network connecting buyers and sellers around the world. And so this notion of small business owners' proximity to know-how and to the networks that could help them survive was a key component of what we all saw. So I think those were just a couple of things to help build on what you were talking about, but lots of progress, lots of learnings, and lots of solutions, but overall, lots more work to be done.
Luz, Jonathan, any other reflections on this topic of what we've sort of learned about the small business?
Yeah, I think another thing that we're seeing now is this American, entrepreneurship renaissance, where a lot of small businesses are starting to be formed. Oh. And so to Shamina's point, they need even more access to support networks, education, coaching, because, lack of revenue is not meant to be solved by a loan. As a matter of fact, that would be irresponsible. And what a lot of these businesses need is access to equity. There's not an equity markets that's developed for the type of underserved businesses that we're talking about. And so what we learned is that grants is really taking that place, or should take the place of that equity component, but grants are very difficult to find. And so what interventions can we offer these small businesses, both established and new, to make sure that those that have an opportunity and the grit and the desire and the product to be able to grow and thrive get access to those resources early on in their journey so that they can succeed?
Jonathan, anything you'd like to add?
Yeah, the only thing I'd say to complement what Shamina and Luz said was the offer of technical assistance. And it's not just happening with banks, one singular organization, but a network, developing that ecosystem. So organizations set up, entrenched in the communities, have the connections, the level of trust. That's the opportunity to talk to a small business about, hey, when you're preparing for approaching someone for capital, how should you be doing that? And if you think about it, a small business is running, they don't have a 25th hour, right? to do that planning, so where they can tap into resources and get that ecosystem effect. I think that's meaningful in kind of preparing for future growth.
So yeah, we're going to talk more about some of these specific things, interventions. I realize we're painting Main Street with a pretty broad brush to start, right? We just said it's 99% of businesses in this country are small businesses. So we're actually talking about a whole bunch of different kinds of companies that might have different levels of access, that might be led by different individuals, different parts of the country. So and let me start maybe with you, Luz. Was the pandemic equally felt across Main Street? And maybe what are some of the circumstances, the conditions that changed how it was felt?
Yeah, absolutely not. I mean, I think that we all know that the pandemic hit underrepresented, underserved communities, both consumers and small businesses, harder than others. You know, just looking at the PPP loans, for example, only 12% of Black and Latino-owned businesses that asked for PPP or any type of federal assistance got the entire amount that they requested. 41% were basically turned down 100%. And so, you know, when you look at Black-owned businesses or women-owned businesses, 90% of those are sole proprietors, as one employee. And that program at the beginning excluded, right, single-owner businesses. It was an employee-based. And so a huge portion of that segment of the market of small businesses was shut out. You know, because I am from a CDFI, I'm going to put a plug in there. CDFIs today, you know, don't perhaps, in terms of percentages, when you look at the size of small business lending, provide the vast majority. But, you know, when the call was made, CDFIs were one of those segments that really jumped in to help, and $34 billion of PPP loans were dispersed through CDFIs, which was unheard of. I don't think anybody in the industry realized that was the capacity. So these funds would have never made it to those small businesses without access to community lenders and others who really focus on these disadvantaged segments of the population. You know, I think that there's plenty of studies that you know, small businesses, or at least half of them, operated with 27 days of cash reserves. So think about it, right? That means that they are one refrigeration unit away from busting or having to replace a van before they potentially can be out of business. And now, when, you know, what we're seeing is with the interest rate hikes, inflation, recession, labor challenges, supply chain challenges, is that these small businesses are becoming more and more vulnerable, right? And without access to the resources, technical, financial, digitalization, they're going to have a really hard time getting through this next storm that's coming upon all of us.
Jonathan, Shamina, do you want to comment on this dynamic of how really there was an equitable distribution of the pain or the support during the crisis?
I'm happy. Yeah. That was something we learned real time. I think the fact is we haven't gone through this type, but there was a robust response and figuring out, okay, how does this get deployed? And we were learning real time. So working with our CDFI partners, giving access to our Fed window. We worked with 10 CDFIs that allowed them to pledge PPP loans and give them leverage to be able to make incremental loans, getting loans out into their communities. And what we learned from round one, as you alluded to round two, was we made proactive outreach into majority, minority census tracts. And that drove an outsized increase in applicants because it was an awareness thing, making sure people understood, hey, this is the programs out there, and make sure they understood, hey, go after that and make sure that you make use of the available resources.
What did that look like? What did that proactive outreach look like?
So that was leveraging email outreach, not waiting for customers to contact us, because we want to be mindful of what's the right way to approach people. But a critical need like this, you mentioned the working capital cycle, the the thin margin that people are operating under, we made proactive outreach and got a good reception to people looking to tap that program.
I think at its core, I mean, when we all think about small business owners, I think what you're hearing is at the end of the day, it always boils down to two things. It's about time and money. And so as the ecosystem of small business support wraps around the community, we always have to be thinking about what is going to save them time and what is going to help bring them more money. If we're not doing those two things, then we're doing the wrong thing. And so the way that we approached it certainly at the center, but I have to say along with partnerships and with key partners, most of whom are in this room, is trying to understand our complementary assets. So what could Luz do that Jonathan couldn't, that Jen couldn't, but that I could? And I think it really boiled down to trying to figure out, okay, what do you have today that they might need tomorrow? And then how do I fill a gap in this moment that somebody is going to need in the next moment? And so it required, and I think that's why this is called the Financial Health Network, it requires a network of support that focuses on two very clear things: saving small business owners time and helping them earn money so that they can focus on the thing that they started the business to do in the first place. So the refrigeration owner wants to sell refrigerators, or the food owner wants to sell food. They don't want to be thinking about, how am I going to pay my workers? Or what's the process? What's the backroom problem with accessing capital? And so that's where folks like us, many of us, we sort of sit in the background, but we're sort of that engine that is supposed to be driving small business owners. And I think the stronger our network, but the stronger our relationships, the more likely the opportunity and the possibility to help these small business owners recover faster.
So let's get into specific examples of, I'll just go down the line here. It can be your organization or something you sort of witnessed. What were the most successful or unique support programs that you think actually worked, and public or private sector?
So, I think we need to give credit to PPP because the first rounds were not as successful as we all would have hoped, but it did save a lot of businesses, right? Because when revenue goes down to zero, what does a business owner do? And so they had to make decisions between paying rent, feeding my family, doing payroll, shutting down, opening up to protect the health of our employees and our customers. But if I shut down, the employees then don't have any money. So PPP, I think, did, towards the end, it helped a lot of businesses, and that can't be disputed. I think that, as they say, don't let a good crisis go to waste. And what happened here is that as a result, there were some very substantial public-private sector partnerships that were developed in innovation programs and access to capital to bring the ecosystem of players, CDFIs, corporations, banks, nonprofits, and the government to provide access to capital to the most struggling businesses. An example, the California Rebuilding Fund. That was a fund that was created to offer up to $100,000 low-rate loans through the CDFI network, highly funded by banks and partners with the backstop from the government of the state of California. The Southern Opportunity and Resilience Fund, another fund in the Southeast, 15 states providing, again, fixed-rate loans up to $100,000, very low cost, with financial support and technical assistance to these small businesses. When we look at these funds, right, they all were created in the last 2 years. They've raised, and people can say this is, a drop in the bucket, but they raised $400 million. 330 of that has already been deployed. Close to 5,000 small businesses that would have shut down have been helped. And 60+% of those were BIPOC and women-owned businesses. And 98% was the SBA describes as very small businesses, or CDs that are, majority owned by socially and economic disadvantaged populations. So again, these funds, if properly funded and executed, have the potential to have tremendous impact on the landscape of small business lending for under-resourced communities by bringing the government in that can unlock private sector capital, because that's what we want government to help us do, bringing institutions that are in communities that can lend, providing a customer acquisition platform, and providing the leverage and the capital that is needed to lend to these businesses that most banks perceive to be very high risk. And what this has proven is that, if you give them the right approach and intervention, they can end up being very successful.
Yeah, the example that comes to mind is Wells Fargo's Open for Business Fund. So we set that up, tied very closely to the PPP program, and that was a $420 million small business recovery effort. And the sizing of that is tied to the gross processing fees that Wells Fargo would receive from PPP loans. And it was deployed through a network of CDFIs and nonprofits, but going directly to impacted small business. CDFI like Axion was a partner that we were able to get that capital out in the form of grant funding and making sure companies had access to capital, keeping their doors open, keeping people employed. And that's a new program. There's no playbook that we necessarily had, but developed it on the fly and said, hey, what's a way that we can put this, don't waste a good crisis, but make use of that program to deliver that capital.
I think that again, sort of in the vein of networks and enabling, two organizations that we worked with among many had a digitization bend. And so, well, actually three. So there was an organization called the Community Reinvestment Fund that enables a lot of lending. And we worked with them actually pre-pandemic to help them speed up their process. So they came to us with a proposal to help streamline and bring in the technology that was needed to make loans faster. And because speed is the big killer, speed and scale. So we worked with them pre-pandemic to start helping them build out their technology platform. And if I recall correctly, they said that during the pandemic, I think from like the 5 years before the pandemic, the numbers might be wrong, but the ratio is about right. They released about maybe $1 billion over a couple of years. But then in the first few months of the pandemic, because they had created this thing called Connected Capital and sped up their digitization ability in partnership with the center, they actually were able to distribute something along the lines of like $6 billion in the first few months of the pandemic. And the same type of thing happened with an organization called C-Note, which is a women-owned that many of you all know, organization that we actually incubated at MasterCard in something called our Start Path program, where we incubate startups. And C-Note happened to be one of the companies that we incubated pre-pandemic again. And once we realized from the center side what she was doing, which was streamlining the underwriting ability to make the capital available, we worked with them to help, again, invest in their digital technology to help them, I think, shrink, again, the numbers may be wrong, but the ratio is I think, equivalent, shrink the time it takes for small businesses to qualify from weeks to days. And they're continuing to do that work. So again, saving time, helping small businesses get access to more money. So those are two instances. And I guess the third, I'd be remiss if I didn't say, 4 years ago, we worked with Grameen USA to invest in their technology platform and their digitization journey. And then certainly during the pandemic, if I understand correctly from Andrea, they were able to move, I think, something like 15,000 women onto the Grameen USA platform in a matter of days instead of a matter of months. And that allowed them to get increased access to the lending and the loans that Grameen USA had access to. So again, it is this thing around time, money, speed, scale, all connected to digitization.
Please.
And I'll say, the CRF platform is really what powered these public-private sector funds to be able to get a marketplace of businesses that would come in and then be redirected to the different community lenders based on, the market, based on the region, and based on the size of loans that those lenders were willing to make. So they're powerful, investment that came to fruition, particularly during the pandemic.
Yeah, and the only thing I'd add on topic of both Connect to Capital and CRF, that's another partnership where we've gotten involved and stood up what's called the Small Business Resource Navigator, and giving an opportunity for loans where we're not able to meet the particular need. It's introduced to a network of CDFI lenders, and again, making connections for small business owners with the need for capital. But it ties back to the ecosystem effect, and you're not going to be able to do it individually, so it's the partnership impact.
Yeah, you've all mentioned partnerships, the value of network. This is the Financial Health Network Conference. Clearly, this is not a problem that is going to be solved by anyone, individual, institution, entity. It's much bigger than that. Let me go back to you, Jonathan, and I know some of you have actually worked together over the course of the crisis. Can you talk about some of the other sorts of partnerships that really worked?
Sure.
Yeah.
Yeah, and as Vikas mentioned at the outset, my role at Wells Fargo is leading our MDI strategy, so working very closely with minority depository institutions. And in early 2020, we were in the early stages of meeting with a group of Black and African American led MDIs, and ultimately made investments in 13 of those banks. But in addition to making equity investments, we wanted to do much more than just write a check. And not the capital is important, but how can we bring our resources, our footprint, our people on the ground to bear and have strategic conversations? So making the investment, building relationships and trust, that gave us the opportunity to start talking to some of the banks about where they wanted to expand. And one bank in particular, First Independence Bank, saw the tragic death of George Floyd in Minneapolis, which is one of our original headquarter cities. And they made the intentional pursuit of, there is no Black-owned MDI in Minneapolis. We need to set up a presence. In the background, there were separate conversations happening between the 5 largest banks in the market, Wells Fargo, Bank of America, Bremer, Huntington, and US Bank. And not very often you see banks collaborating that way, but we wanted to say, how do we bring the MDI and give them a strong start in the market? So Wells Fargo had the opportunity to donate a location that First Independence has opened as the first MDI earlier this year in Minneapolis, but it was very much, okay, equity check important, but how do we position for kind of sustainable growth and do much more than just the starting point, so it can kind of grow with the firm.
Is there a partnership you want to talk about?
Yeah, I mean, we've been very fortunate in establishing meaningful partnerships, particularly, over the last couple of years. I mean, and here we are, I'm sitting on a panel with Shamina from MasterCard, and I'm going to talk about a partnership with American Express that we launched in the last 2 years. But we've had a long-term relationship with MasterCard, so, we're all... So, when, again, prompted by the George Floyd, I think there were a lot of companies that made pretty substantial commitments. And, we partnered with American Express, and in April of 2021, we launched a program to, propel the growth of small businesses by providing capital, business advising, and coaching to businesses that really had an opportunity to scale, in 2021 and beyond. They made an investment, $40 million, for loan capital and subordinated debt, the largest investment by far that our organization has ever received. But again, capital alone is important, but it's not the only thing. In addition, they've provided a lot of market research, network, and marketing to their network to get customers into our platform so that we can then, do the lending, product design, and other tools that have really been very substantial and have allowed us to now start doing some R&D around all these small businesses to really deeply learn how can we go down into the credit box and expand what we're doing, because we're learning so much, and be able to really talk about financial inclusion in a much more broader way that even us as a CDFI were thinking before the pandemic. So it is these kinds of, public, private, government, CDFIs, philanthropists, nonprofits that are really gonna have to come together to solve the problem, because before the pandemic, this problem was an $87 billion gap for loans under $100,000 to small businesses. I would venture to say that that number is only but growing.
I'm really glad that Amex followed our lead on kind of joking, but kind of serious. 10 years ago, the model, though, of leveraging assets for impact
Absolutely.
is, I think, what you're highlighting, and I think is really an important lesson for those of us who are working with companies who have capital, to be sure, but actually, I think what you're pointing out is the same way that we do it at the center and at MasterCard is we use the assets of the company for impact. So this notion of the network, obviously, the technology, the data and the analytics, the research and the insights, and then certainly the capital and the expertise. That's what the magic is when you can find a partner who's willing to go with you on that journey, is to sort of say, certainly the capital is interesting and useful, but if you can really uncover a bit more and say, wait, what is the data telling us? How do we use data and analytics to help our small business customers do better, whether it's marketing or management? But I do think it's this notion of whether it's a bank or a CDFI or anything else, it's doing the harder thinking about how do you really work together as a partner to use your assets for impact. And I think that's why, for me at least, and for the folks at the center, it's about partnership, but underneath it, it's really about relationships. And underneath that, it's about friendships. And so in the end, these are people that we all want to work with. And I think that that's an important component of how we get to this thing faster.
Let me say, Jonathan, anything to add? Okay. I want to start talking about the future, but really quickly, did we see anything that really didn't work as you look back over the last 2 or 3 years? Was there any things that you saw that really seemed ineffective or damaging that were tried?
Well, I could speak to that a little bit. It's not that it necessarily didn't work. I think there are a lot of things that didn't work, certainly during the pandemic. But here's the thing I'm worried about right now, and that is cybersecurity. So what we know from our work at MasterCard is that 60% of companies shut down within 6 months of a cyber attack. 60%. Only 40% of companies have ranked cyber in the top 5 things that they worry about. So there's a really big gap between what small business owners are recognizing as a thing they need to really think about right now and something that will have a tsunami an overemphasis on shutting them down really quickly. And so I think that with the advent and with the acceleration of digitization and all of the work that people are doing on the payment side and getting access to capital, I think the thing that didn't or sort of came along with that as part and parcel is this notion of is what's happening to many of us right now, which are data breaches and cybersecurity. And if you're a small business, you're going to shut down pretty quickly if you don't have a serious security system in place. And I want to couple that, though, with something that I think is also sort of a silver lining to something that I think is really important for us to be worried about, and that is the notion of open banking and that what that does for credit and proxy for credit. Because I think the other thing, if we can get our hands around this faster, is the notion of our thin file customers who may not necessarily, especially our underserved and underrepresented customers, who may not necessarily have access to collateral or credit scores to get the loans at that lower interest rate. And this notion of open banking and ultimately what that means for open finance allows small business owners to release in a very, with their permission, their banking habits or their banking routines, so that other credit providing agencies can look at their banking behavior and determine whether or not, they can use proxies for credit scores. So I would say those are the two things that are both things we need to worry about, but also things that if we can take advantage of might help us, again, leapfrog over a lot of the issues that they're facing.
Yep. Liz, do you want to add something?
Yeah, I mean, I think you make an excellent point, Shamina, because I think one of the things that we learned, and consumer lenders have been doing this more than small business lenders, which is really understanding a small business from the perspective of their bank account data, cash flow lending, underwriting, debts, alternative data sources, and recognizing that credit data alone, credit scores, definitely are not, particularly in the last 2 years, right? Your credit scores there's a notion that it predicts future behavior, sure, but what happened in the last 2 years? That no longer is the case. So being able to look at other sources away from what traditionally has been the standard for small business lending by financial institutions is going to be what we think it's the future direction for the space.
So let's talk about the future. What are your organizations planning in the coming years, and what can private and public sector players in general do to support Main Street moving forward? Because you've all repeated that we're not out of the woods by any means. I'll start with you, Jonathan. What do you want everyone to think about, and what is your organization thinking about?
Yes, I'd say two things. We spend a lot of time thinking about how to deepen our relationships with the MDI and CDFI space. We have deep relationships, investments with 15 MDIs, but there's 145. We have long-standing relationships with approximately 150 CDFIs, but deepening those connections and finding new and different ways to do business with those organizations, and a very intentional focus on diverse owned and led small businesses. And I think on the consumer side, one of the things, and a shameless plug for my colleagues in the audience, but we've stood up our banking inclusion initiative, and it's not on the business side, but it is talking about the unbanked population. 7 million unbanked in the U.S., disproportionate share to the minority populations, and giving access to digitally enabled, low-cost banking solutions. That's what I think is the next step, to have someone on a firm foundation as an individual consumer, and that's probably the right jump-off point for them to have the opportunity to be pursuing their entrepreneurial pursuits.
Yep. Liz?
We think, as we transition beyond COVID and the crisis level response that was necessary, a big question for organizations like ours and other CDFIs is, how do we translate the awareness, the energy, and the resources from the last 2 years into long-term, sustainable, and systemic growth? And how do we access the investments, both CDFIs, MDIs, during non-crisis times, so that we can build our organizations to be ready for the next crisis? And so we are committed, and we believe that the way to do this is by designing and developing industry-wide, bipartisan, market-based solutions that allow federal government to provide resources in the form of capital that then unlock private sector capital at scale, so that we can scale with integrity and invest in the CDFIs and MDIs that really sort of became the economic first responders in this crisis, and continue to invest in the small businesses that need us so much for our economy.
So I've got two things. One is a little bit of a preview of an announcement, not the announcement itself, but a sneak peek at something we're about to launch. But before I get there, just to let folks know about, Luz just reminded me, we're working on a national financial inclusion strategy. And so if you haven't been a part of, there's about 150 companies and organizations like many of you in the audience that have signed up to say, it's time for the United States to actually develop and implement a national financial inclusion strategy. To your point, with the unbanked, the work on the small businesses, there are still too many companies and small businesses and people that are operating either are underserved or completely out of the system. So when you talk about, Vikas, things that didn't work, the people who were out of the system and out of the network, it was really hard to try to bring them in. So one thing would be, if you haven't heard about the National Financial Inclusion Strategy partnership that we're doing, please let us know or talk to Ida Rodemick or anybody from the Aspen Institute or Jennifer Tesha or anybody about that. Please do get involved in making that a reality. And the second thing, again, is a little bit of a sneak preview, but to all of the things we've talked about today and many of the things you'll hear over the next few days, we have taken the initiative at the MasterCard Center to put together a program that we call Strive, that we'll be launching next week. And what Strive USA will basically do is bring at least 5 million businesses the wraparound support services that they need to succeed in a digital economy. So you've heard us describe all of the problems that they're facing. The purpose of Strive is to say, whether you are trying to get capital, go digital, or build your network and know-how, there is going to be a community of enablers that surround you that are working hand in hand, hand on heart, to ensure that we do whatever it takes to help small businesses owners survive and thrive and strive in a digital economy. So you heard it here first.
Where the Oscar music is about to come on here, so we're almost out of time. I'll just say thank you very much, Luz, Jonathan, Shamina, for this discussion. You have all heard now repeatedly that this is not the work of one person, one individual, one entity. We're at the Financial Health Network Conference. Let's all please spend the next 2 days talking with each other, forming partnerships and collaborating to tackle this incredibly important, pervasive issue of the vulnerability and the lack of resilience of Main Street. There's a lot of work still to be done, so let's work together to do it. Thank you all.